All right, week 8 outlook number 2, beginning with the Great British Pound. All right, so like we said, continuation of current price action. We were looking for price to roll over, which exactly what it did, breaking out of the price leg that we were currently in. And now we're giving, the continuation of bearish price action and the effort to continue lower, which is great. This is exactly how the analysis played out. So now what we're just looking for is progression towards our structural points for our liquidity points or bullish structural points. So our first one is actually here. I really don't consider this one here, but I mean, I guess it is a low. But I mean, if you really want to, that's the low here. But the real major structural point on the 4 hour essentially would be here, or the liquidity point that we're aiming for. Then we have our next one, which is the low that led to, this price run here, and then we continue lower. So we've actually broken out of this price leg. So I'm gonna go ahead and get rid of these annotations. That right there was just looking for potential entries. So now, yeah, we're actually in a very, very nice period where we're transitioning, where we're almost completing the transition from bullish price action to bearish price action. I'm loving the low effort, and like I explained it before, what you're seeing, if you're going to look at the candles from this perspective, is that I said we were going to have a low effort, high volume liquidity run towards these structural points, or towards these liquidity points. And as you're seeing, the momentum of the black candles, which are my bearish candles, versus the momentum of the bullish candles, which are my purple candles, just qualitatively looking at the candle structure here, you can see that the runs for the black candles are quite short, but quite voluminous and very low effort, and they're really high secession, where we have lots of black candles, one after the other. And then the bullish candles, they're very, very short lived, very small candles. It takes a lot more effort to push up. And so this is good sign, seeing that the bearish price action, or the bearish sentiment, is very, very strong here. If you just want to look at it from the qualitative perspective, but we've dove into the reasoning behind why we were looking for this transition and why we're looking at the continuation of this price action currently. So nothing more to say about that. Let's jump over here to the Dow Jones, actually. So on the Dow Jones, we've essentially began oscillation about the equilibrium point of this price leg, which was anticipated. Not really much to say about this right now. We're just actually stuck inside the price leg, and we've begun to essentially range inside this price leg. We're still looking for now the balancing of the price leg. So on the discount side, we've mitigated, this area of interest here, but the origin of the move is somewhere in here. And then on the premium side, it's arguable that this would be considered a price gap. I wouldn't really argue that it is a price gap, because it did not mitigate any sort of previous inefficiency objects. So primarily what I would be looking for, and how I would interpret the price action moving forward, going from premium to discount, would be focused on the internal liquidity points. And so primarily the highest, or closely most highest liquidity point that I see that's on the premium side would be here. And so when we don't have an inefficiency object to play off of or to identify, we really want to focus on looking at those internal liquidity points to assess actions to see how price looks to move forward. And as of right now, this liquidity point here is the closest one that we wanted to assess the action. And as you can see, price decided to perform the action of a liquidity draw and has begun the downward descent here yet again towards equilibrium and into the discount side of the range, where we actually closed just above discount, so we're closed in the premium here. But nonetheless, I take note of the action that occurred here, which is a draw on liquidity, or liquidity draw at the structural point, or at this internal liquidity point rather, for this price leg. And so when we don't, like I said, if we don't have any clear inefficiency objects to play off of, I wouldn't validate this as a price gap, in my opinion. I'd rather play the action of this internal liquidity point. And then similarly, this is a structural, or this is an inefficiency object because it's a part of mitigation of a previous inefficiency object, which is this 4-hour sponsored candle, or you can call it out this price gap as well. And we just dove a little bit deeper, depending on your interpretation of that. So that's what I'm seeing right now for the Dow Jones. It does get a little, and that's I gave you some information there that I usually don't give, but that is a little tricky, and it's a skill to pick up, especially if you're very focused on looking for sponsored candles or price gaps or inefficiencies. You really don't, if you can't justify one, don't justify it. Look, focus on the structural points, focus on the liquidity points, focus on the actions that occur at these points, and that'll help you navigate the ranging markets, especially in a price leg or in just the macro range in general, a lot easier. And that's how we're a segue into looking at the NASDAQ, which is how I was able to, navigate this very weird looking range, very consolidated area, where I was explaining to you guys that I'm looking for the counter, really a counter trend essentially of price moving lower to take out this structural point here. And it's based off of the unwillingness that was generated in the premium side and continued momentum of the candles to the downside, showing that there isn't really much for price to go higher. I would like to be wrong, which is what I said. If we were to move higher, I wouldn't necessarily understand why we would move higher based off of any inefficiency objects, which is what led me to focusing on looking at the actions at the structural points or internal liquidity points of this range or this price leg essentially. And so, because of that, it's really, really important not to really look for the inefficiency objects to play off of, but it's really important to look at the structural points and liquidity points inside of this area to base how you want to look for your opportunities inside of the Nasdaq. And so, in real time, what I'm looking at was the mitigation essentially of this area here, and it's arguable if this was an efficiency object, if this is a mitigation of a previous inefficiency object, because this right here is, unmitigated. So essentially what we just have is just pure price action, right? And so when we just have pure price action, like I said, we want to look for any instance of generation and mitigation of liquidity, which is what our actions are. And so the one that stands out to me is actually the mitigation of this liquidity point here. And I say it's liquidity point because it's just a relatively internal high there. And because of that, we had a draw in liquidity, and that draw in liquidity is what sparked this downward push here. And because we had that downward push, we now have essentially, a high that led to a low, that led to a high, that led to a low. And so now, seeing that this price action is pushing higher, what I want to see is what happens because there's no inefficiency objects to play off of. I wouldn't really consider this price gap an area of interest that I would like to play. I mean, yes, it got mitigated, but moreover, I would like to see the action that occurred at the internal liquidity point here, which just so happens to be, as of right now, it looks like a draw on liquidity. And so because this is a draw on liquidity, I'm looking for price to, pull back and mitigate something on the 5 minute for execution and play one of my models here, and then look for the continued turnover for price to go lower. Now, I will say, like I said, this is very counter trend, and in the grand scheme of things, I'm really on the discount side of the market looking for sells. So the flip side, the pro trend move would be looking for the mitigation of essentially a structural point or a internal, liquidity point on the discount side to play off of for bullish, price action. And so I wouldn't necessarily consider this as a draw on liquidity per se. It's arguable. I would really like to say it's just continuation of price action. But actually, what the heck? We'll call it a draw on liquidity because it does hold the form of one. And so essentially what we have here is we have high, low, but this low was generated and it had a draw on liquidity, and that led to the run on this high, and this run on this high ended up being a draw on liquidity as well. So now we've essentially drawn liquidity on this internal range here. And so we've effectively mitigated all of the liquidity inside of this area. And so now we're looking for a price to actually give the move that it wants to give. And so it's either going to pop in accordance with the draw on liquidity here, or it's going to drop in accordance with the draw on liquidity of this liquidity point here. My bias is towards the draw on liquidity, playing off the draw on liquidity here for continued sells. But like I said, I'd like to be wrong because the macro bias is still continued buys. So we'll see what happens. All right, and then on to silver, nothing much, and on to gold. Gold is continuing to consolidate. Not much to say here. I'll leave. I like to say I'll leave this up to the exercise for you guys to analyze and see how you want to navigate based off of what I just explained with looking at structural points in uh, in these markets when there's not really clear inefficiency objects to play off of. All right, that's week 8, number 2. Peace.